What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, I try to share with you the stocks that are at the top of my watch list going into the week ahead, as well as how I feel about the market conditions. So if you're interested in getting a weekly watch list like this every single Sunday, remember to click that like and subscribe button. Let's jump right in. Okay, so we're going to start with the broad market indices, starting with the NASDAQ. And as you can see, it's been a great couple of months for the NASDAQ. However, this week wasn't so great. We actually had 4 red days to close off the week with a kind of dramatic fall on Friday with increased volume, which is something you don't actually see very often, is higher volume on a Friday. But this week we saw higher volume as most of our indices sold off. We also have a crossover of our MACD, which would be a sell indication, and the RSI is exiting the overbought zone, which is again a sell indication. So not great indications from the NASDAQ. These could be indications or signal of a trend reversal, but as of right now, we are not in that sort of trend reversal area. We are still higher than we were about 2 or 3 weeks ago. So there's not a huge risk there, but there are some negative or bearish indications as of right now. And when you look at the S&P 500, it's a lot of the exact same thing. It was a little bit of a rough week. We fell a couple of percent. And on Friday, we fell pretty dramatically compared to the week before that. However, we are still up ahead of and higher than we were 1 and 2 months ago. So as of right now, nothing to panic about, but it is something to keep in the back of your mind. Now, when we look at the Dow Jones, it's again pretty much the same story, except the entire week was red for the Dow Jones. It wasn't a good week at all. It fell several percent, and now we're sort of testing the support that was established at the end of August. The next level of support would be right here around 34,000, and that was established basically at the beginning of August here, end of July. So really interesting time period right now. All of our indices are starting to show indications of a trend change, but we don't have real confirmation as of right now. And when you look at the Volatility Index, or the VIX, this is a chart and basically an index that measures the expectations for volatility over the next 30 days. It does that by taking the options contracts, putting them through an algorithm, and trying to figure out how much volatility people are expecting over the next 30 days, because volatility means risk, it means dramatic movements, and it means more than likely when this goes up, the stock market is going to go down, or people think that the stock market is going to go down. And so that's what the Volatility Index represents. And as you can see, I have it dating back to basically the beginning of 2021 here, and we're sort of at this medium level. Over the last few days and over the last week, we definitely rose from 105, which was sort of this kind of great little low level. We have now risen up to about 125, and that's sort of this medium level of like, okay, sometimes we come back down, sometimes we go a little bit higher. And if it goes higher, that's an indication that people in the market think that the stock market is going to show volatility, usually in the form of a decrease in values. And so if the volatility index goes higher on Monday and Tuesday, it means that people think the stock market is going to go lower, and it means that they're probably also going to be selling their positions. Now, just to put this in reference, this is what the volatility index has looked like since the beginning of 2021, and this is what it has looked like since the beginning of 2020. You can see the high point right here of around 210. This was the pinnacle. This was the peak of COVID. This was the height of panic in the market, and the volatility index rose to over 200. Since then, it's been basically trading in this channel, and I would say as of right now, we're sort of at that mid-level. It might go a little bit further, and that would be sort of our test of support and our test of a real pullback in the market. And if it goes any further than that, if it goes anything above this sort of 150 level, that could be signs or indications of a real dramatic shift in the market. But as of right now, this is one of the indications that I would be looking at if you think the market is going to crash, or if you think things are going to collapse. This is probably where I would have my eyes glued to. Now, when it comes to cryptocurrency, it has also been a fairly dramatic week. If you look at Bitcoin, we had a pretty massive drop. As soon as I released my watch list of last week, Bitcoin fell by like 10 or 12%. It was a pretty dramatic decline, and it has still continued to decline over the last 2 to 3 days, just by a small percentage here. We are currently sitting at around $45,000 USD, almost sitting on our 2 moving averages here, which is sort of a nice thing to see. It means that they could be acting as support right now, but we did have a massive drop, and this massive drop actually coincided with the launch of Bitcoin as a national currency in El Salvador. So that definitely put a damper on things, and it wasn't a great start for Bitcoin as a currency in a country, which El Salvador was kind of the first one to do. So a little bit of a downside there. And then just recently the SEC has come out and they are not very happy with companies that are lending crypto and allowing people to stake their crypto and lend it out to other people in return for a yield on that crypto. The SEC looks like they're probably going to be cracking down on that sort of mechanism over the next little while. And so the idea of staking your currency or staking your crypto on a platform like BlockFi or Coinbase, it looks like you might have some issues with that over the next little while. So that also didn't help the Bitcoin situation. Now, when we look at COVID in the United States, it's a really interesting chart because clearly things aren't as bad as they were at their peak right here in January of 2021. However, they're not very good. It looks like we could be seeing the start of a small decline, but still things are 3/4 of the way as bad as they ever were in the United States, which is not a good indication. It's not a good sign, especially after the vaccine rollout. It means that people aren't getting vaccinated, and this vaccine, it's not the silver bullet. We need to do a little bit more. So that's something that you can clearly see from this chart. Now, I know that I've spent a whole lot of time here on the market conditions, especially compared to my other videos, and that's because it's really important because we have a lot of things going on. First of all, September and October are usually the months where we see a major correction in the year if it happens. So any month or any year that there's a major correction, most of the time it's coming in September or October. So that's something to be aware of. Also, the indices are starting to show signals and indications of bearish direction. They are not confirming it. We are not seeing a major pullback yet. We are not seeing anything that is panic inducing, but we are starting to see a couple of signals, a couple of indications that the market could be starting to correct, and the COVID cases are still fairly high. And as of right now, the VIX has risen from that very kind of safe level up a little bit to sort of that medium level, and if it continues any higher, that could be cause for concern. So what is my game plan going into the week ahead after analyzing all of that information and after evaluating all of that? Well, number one, I want to protect any of my risky positions with a stop loss. So if I have any positions in my portfolio that I don't have high conviction on, or that aren't going my way right away, or that I'm a little bit worried about, or the conditions in the last week have changed my hypothesis about that trade, then I need to put a stop loss on those, or I need to just exit those come Monday, Tuesday, because I don't want to take on a ton of high risk right now, especially with a little bit higher volatility in the market. The second part of my game plan is that I plan to add to any of my high conviction plays on a correction. So if I get any of my like top 5, top 10 holdings that are dropping and that are dropping significantly that I plan to hold regardless for 5 to 10 years, I'm going to pick up a couple more shares. I'm going to add to those positions because if it's a high conviction play, it means I believe in that company for the long term, and the ability to buy in now and realize those profits in 10 or 20 years when I'm retired, that's the way that I want to do it. So if there's any great companies, fantastic companies that take massive sell-offs, I'm probably going to add to those positions. And the last aspect here is that I'm probably going to be shorting any of the weakest companies. So if COVID numbers skyrocket all of a sudden, I might be shorting some of the airlines or some of the cruise lines, but I'm going to be keeping that kind of on a day-to-day basis, depending on what happens in the market, especially come Monday, Tuesday. Now, when it comes to earnings, what's happening this week, there's not a lot of big companies and there's not a whole lot of news. You do have Oracle, which is pretty exciting. That's a fairly large company. We also have Fuel Cell Energy. I took a look at them this week, as well as Jinko Solar. This is one of the largest solar producing companies in the world. So I'm taking a look at a couple of these companies. None of them really made the list this week for a watch list, but there are lots of other opportunities out there, starting with these two companies that I mentioned earlier this week in a video. So the first one here is Coursera. Now, I did a little bit of a deep dive into this company in one of my videos, but the reason that I like this company is they have like 66% gross profit margins. They're growing at 40% per year. They're a fantastic company. They're good for the world, and the business model is phenomenal, and the number of people that can access their business is only going to grow over the next few years. So everything is pointing in the right direction for this company, and they have come down from highs of $62 all the way down to major support right here between $32 and $35. We first established it in May, and then since then we have triple bottomed on $35 here over the last 2 months, We're starting to move higher over the last 2 days, testing our 50 and 20-day moving averages. And if we continue the momentum on Monday or Tuesday, that's probably going to be my entry point into Coursera. I'll put a stop loss at like $32, maybe $31. So if we set new lows, that's probably going to be my exit. I'll buy in lower, I'll rebuy back in. No problems there, but I like Coursera over the long term. I think there's a great opportunity. Now, the next company that I want to point out to you was LICY. I also included them in a previous video. On Friday, the stock opened up red after earnings, which wasn't a great sign. Apparently, it missed the revenue targets from the analysts. However, I thought the revenue was actually pretty impressive. It was up dramatically. The company sounds like they're going in the right direction. They're expanding the footprint. They're extremely well funded. And this was a SPAC deal that originally valued these shares at $10 per share. They're now trading at $8 per share. They're at a 20% discount compared to the deal that went through. And I think as of right now, the business model behind lithium-ion battery recycling is only going to skyrocket over the next 5 to 10 years. And I think this company is one of the best positioned to take advantage of that, both with regards to recycling those batteries as well as supplying those battery materials back to the battery manufacturers. Everything about their business model is fantastic. They make money on both sides. I absolutely love it. And if we see a confirmed bounce off $8, I am a strong buyer of LICY. Now, the next company that I want to talk about here is Victory Square Technologies. Now, I currently hold a position in Victory Square Technologies. It's actually one of my biggest losers right now, but I have not sold out of Victory Square Technologies because when you have conviction in a stock, you need to hold on to it. And the reason that I have conviction in this stock and the reason that I like this stock is because of earnings. Now, earnings in my mind is the most justifiable reason to hold a stock. And so that's why I haven't sold Victory Square Technologies. And if you look at the earnings for Victory Square Technologies, they have generated 6 quarters of positive net income. And in 2020, the year of 2020, they generated 29 cents of earnings per share in the year of 2020. The company is only getting better. And as of right now, it is trading at 52 cents per share, meaning that it is trading under 2 times their earnings per share from last year. That doesn't take into account their growth or the forecast or the successes that they've had, but this company is significantly undervalued. I am carrying a loss on it right now, but I plan to significantly add to my position as soon as we see significant support and a change in trend here. I only have a small position right now. I'm more than willing to put big money into Victory Square Technologies. I like the team, I like the business model, I like what they're doing, and as of right now, I think we have the starting point of support right here around 45 cents. And if we can sort of break through this 55 cent level right here, 56 cents, where we saw previous resistance here, I'm probably going to put my money back into Victory Square Technologies. I really like the company, and the earnings per share in this company relative to the stock price is absolutely phenomenal. I don't know if you will find a better valued company in the industry. The only challenge with Victory Square Technologies is that they're an investment company. They're not a revenue and gross profit and sell a widget or a software product. They're an investment company, so it's more difficult for retail investors to understand. Now, the next company I want to point out to you is SRAX Incorporated. Now, this is a very unique company that helps publicly traded companies understand who is buying their shares, what type of people are buying their shares, how many shares they own, and how they can attract more shareholders. So their entire business model is around the data of who is buying which shares. And what's really unique about this is they sell that data as a software platform to public companies so that they can understand who is buying and selling their shares, but they are also using that data to invest into the market so they can understand where the retail investors are going, where the institutional investors are going, who owns what, and they can hopefully use that data to better understand the market and make better investments in the market. And so what I'm really excited about this business model is they can make money selling the software, but they can also make money using the data from that software to improve their own investments. And over the long run, I think that is a strategic advantage, and I think that could give them amazing returns. So what I'm watching for right now is a break of $5.50. So if we break higher on Monday, Tuesday, I'm probably a buyer of SRAX, and I'm looking for the first profit target around $7 right here. If we can get above $7, I'll probably put a trailing stop loss on it. But over the long term, I think this company, if they can execute on the software and execute on the data and make the right investments, they have a huge strategic advantage in the industry. Next company I want to talk about here is Boosh Plant-Based. So this is a really unique company that develops ready-to-eat vegetarian and vegan dishes. They're basically stored in the freezer or in the fridge at the grocery store. You buy them, you heat them up, and you've got a full meal that's ready to go. They're developed by some amazing chefs. They've got great marketing and a fantastic sales team that I think right now is just killing it. They're currently in every single Whole Foods, so I think they have a great opportunity. I think they're growing really fast, and I don't think we've seen the great set of financials that's probably going to come out soon. So what I am watching for in Boosh Plant-Based is I want to see a breakout of this trading channel right here. I'd like to see a break above this sort of 125, 130 level, and then I'm going to be a buyer of Boosh Plant-Based. I really like the company. I like the CEO. I've interviewed him on the channel. I've even profiled the company. I think everything about their business model and the industry is fantastic. The margins should be good, and as of right now, they have some of the best sales progress that I've seen in the industry. Okay, now I got 3 more companies left for you here in this watch list. The first one here is BioSig Technologies. I've been talking about this company for a little while, but I haven't actually taken a position in them because, as you can see, the stock has gone in kind of a bearish direction. But what I like about this now is that we have established a triple bottom at $2.50. As you can see, the stock has bounced off it once right here in November 2020, again in April of 2021, and again just recently over the summer. And now we are still sort of hovering around this major level of support where people continue to step in and buy up these shares. And so what I think is happening is that all of the sellers that just can't wait it out, that can't hold on, are basically getting drained out of the company. The shareholders, the insiders, and the people that can see value in this company keep stepping in and buying up anywhere between 250 and 275. That's acting as a major level of support. And as soon as these sellers run out and the company continues to keep up this momentum, I think there's going to be a great opportunity in BioSig. So I'm watching this one very closely. I will not be buying in until we have confirmed momentum and a change of direction and a trend change, but I am watching this one very closely. I don't know if it's going to happen this week or next month, but I do think there's just a massive opportunity with this company. Again, I've interviewed the CEO. I like what they're doing. I think there's a massive opportunity in this industry. The next company I want to talk about here is Chargepoint. This was one of the first companies that I really did some deep due diligence on, and the reason that I like this company right now is because we established a quadruple bottom at $19 here earlier this year. So back here between March and June, we tested the $19 level 4 different times, and now we have risen up to 35 and come all the way back down to $20. We're currently basically sitting on this exact same level of support, and so what I am watching for is I want to buy it anywhere between $19 and like $20.50. I want to put a stop loss at like maybe $18.50, maybe $18, and I think we're going to see some long-term success with Chargepoint. So I'm looking for that bounce back above 27 and hopefully back up to 35. Now, the last company that I want to point out for you here is one that is actually based in Alberta. They are mining lithium in Alberta for electric vehicles and renewable energy, and I've actually just kind of sort of heard about them. I did a little bit of due diligence today on them. I did some research. I started looking at the chart, and I just had to put it on this watch list. It's kind of like the last one here, because if you look at this chart, we had highs of $5.37, and then for the last sort of 2 to 3 months, we've been basically trading between $1.50 and $1.75, and just over the last sort of 2 to 3 days, we've moved up from $1.60 up to $2. We've had a very dramatic movement over the last few days. We've got all of our moving averages converging and starting to cross over. Our price is now above all of our moving averages. Our MACD is looking good. Our RSI is moving higher. And if you look at this right here, these green and red bars indicate your volume, and they are higher than they've been in the last 2 to 3 months. So we're seeing higher volume on this stock. We're seeing increased price movement. We're seeing a better demand for lithium and a resurgence of these lithium stocks. And I think there could be a massive opportunity in E3 metal over the next few weeks. Now, as a summary to this video, I know it was a long one, but what you need to really focus on is watching the markets very closely on Monday, Tuesday. The indices are going to tell you exactly what is happening. If they are falling, the entire market is falling, and you probably don't want to be a buyer. If they're going up and we see a nice rebound come Monday, Tuesday, it's time to invest your money, it's time to deploy that cash, and it's time to get your money in there. Secondly, you need to protect your capital. If you have any risky positions right now, if you have any big losers right now, it's time to put a game plan in place. It's time to put a strategy in place. It's time to see if you can take any advantage of tax loss harvesting, and it's time to figure out what to do with those losers. Thirdly, you need to buy the high conviction plays if they sell off. If you have a company that you truly believe in for the long term, I'm talking 5, 10, 15 years, if it sells off in the next month or two, you need to be investing in it. You need to be buying more shares. You need to get into it, because over the long term, you're going to do very well if it's a high conviction play that you truly believe in and it's a great company. The last point I want to make is that you need to manage your risk. If you're concerned about the market crashing, if you're worried about everything absolutely tanking, put a stop loss on all your positions, get out of them. You can always buy back in. Commissions these days are either free or they're only $5, so there's lots of different ways that you can manage your risk. The best one is convert your stocks into cash if you have any concerns. So now if you're interested in learning a little bit more about these risk mitigation strategies, how to understand the stock chart and how to look at these companies, then definitely consider signing up for my stock market fundamentals course. It is completely free and it's hosted on Skillshare. There's over 10 hours of content that will walk you through step by step everything you need to know about getting started in the stock market. There's 8,000 students that have already taken the course, and there's over 320 reviews for you to take a read through. I promise you, it'll be the best free resource that you can find online. 80% of students say it exceeded their expectations, and there's 1.2 million minutes of watch time that people have already spent watching my content. So I promise you, it'll be absolutely worth your time. It's completely free and it's hosted on Skillshare. Now, just as a summary, make sure you do your own due diligence. This watch list is just the companies that are at the top of my watch list that I'm watching. I don't invest into every company on this list. I go into Monday and Tuesday and I try to pick the 1 or 2 best opportunities from this list, and then I reevaluate it as the week goes on. So make sure you're doing your own due diligence, and if you get any value out of this video, remember to click that like and subscribe button, and I'll see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.